Good afternoon, we are Team One, and the following is an analysis of the Fintech company Robinhood using the business model canvas and Porter's Five Forces. Robinhood is an online broker that was established in the USA in 2013. What makes Robinhood different to traditional online offerings is that they charge zero commission for transactions that take place on the platform. They registered 50,000 users in the first week and had almost 1 million users by the end of their first year. The slide you now see on screen shows our analysis of the business model for Robinhood using the business model canvas. We will now look at each box in more specific detail. In terms of key partners then, i.e. who will be partnered with Robinhood, who are the stakeholders that are concerned with the success of the business. First of all, investors to help fund the business, such as the ones listed, Google Ventures, Index Ventures, etc. Membership bodies such as FINRA, the Financial Industry Regulatory Authority, and security membership body SIPC. Tech providers, those that help build the website and the app and the functionality within it. Lenders, the enable credit functionality for our Robinhood's margin lending service, and the exchanges and clearing houses themselves. So what key activities does Robinhood require in order to deliver on its value proposition? Well, it needs to provide a trading platform for a wide range of assets with zero commission, as well as teaching/coaching new investors through using their friendly integrated app. Additionally, they need to be maintaining and updating security measures to give users confidence in the app, as well as maintaining the user interface and user experience for customers to help them trade on the move on the mobile app. What key resources does Robinhood require to deliver its value proposition? It needs a high-frequency trading platform, low-latency trading system, use and access to the most up-to-date market data, and additionally the background software development, IT platform operation, maintenance, as well as the VC funding, obviously to get things going. So the value proposition is quite simply, what is it that Robinhood is looking to deliver? What customer needs are they satisfying? So there's two key things really that we've identified. Firstly, offering a zero commission trading platform for, I guess, current traders who are perhaps tired of having to pay traditional online brokerages commission fees, as well as making trading convenient and easy to do by introducing a user-friendly mobile app which allows them to trade traditional financial markets and cryptocurrencies on the move. Robinhood uses social media primarily to interact with its customers, as well as the online help centre for those that are already signed up. Blogs and articles also, which leads us onto channels within its own smartphone app and website, use of APIs, and again social media in terms of advertising to reach prospective customers. Tech and news websites, i.e. The Street and VentureBeat as well, for a more targeted approach. In terms of customer segments, Robinhood is clearly targeting the retail brokerage market, high-frequency traders with low amounts, also millennials and electronic trading firms. So where do Robinhood's largest costs come from? Clearly staff, as with any business, takes up a large portion of costs, but also the use of cloud IT services, investments in high tech and process automation, IT and other relevant infrastructure and software in the background that helps the business to run. Additionally, from advertising and customer acquisition costs, R&D and security measures. Cybersecurity is a key issue when handling customers' finances. So now focusing on revenue streams. As mentioned earlier on in the presentation, the company makes money firstly by earning interest on uninvested cash in customer accounts. I also touched upon the fact that they have a tiered monthly subscription service. So to explain this in a bit more detail, $5 per month fee will give you access to margin borrowing as part of a Robinhood Gold account or premium account. This $5 gives the customer $1,000 in margin plus additional research and data. Margin loans of over $1,000 are assessed at 5% annual interest, which is well below market average. The third way in which the company makes its money is through order flow payments.
Robinhood has 6 direct competitors in terms of product and service offerings, that is being a trading brokerage. The first one is Tastyworks, trading brokerage for stocks, options, and futures. And the next one is Binance, trading brokerage for global cryptocurrencies, while the other competitors pretty much operating in trading brokerage for this kind of assets. However, unlike their competitors, Robinhood has 4 key competitive advantages. The first one is that the app is integrated with any external news regarding the assets, so investors could make an investment decision right away. The app is claimed to be very easy to use and user-friendly since the target customers are millennials with no experience in trading. The second key competitive advantage is that Robinhood provides trading with no commission and require no minimum amount of investment. The next one, again, unlike its competitors, Robinhood has access to wide varieties of assets, which the combination of all its competitors' assets such as stocks, ETFs, options, bonds, as well as global cryptocurrencies. And to add to the point number 1, Robinhood's target market is a young audience who mostly trade for the first time with a very small amount. As a result, Robinhood also provides training beside being a trading brokerage on how to trade in stock market.
So now we move on to our Porter's 5 Forces analysis, starting firstly with the bargaining power of suppliers. We noted that this was high, as suppliers in this instance include institutions such as the clearinghouses, the exchanges and the regulators. And in order to be a player in the market, you simply have to comply with the rules and regulations that are imposed upon you. Therefore, supplier power is high. There are also only a finite number of exchanges to use. And additionally, information is closely guarded and is largely the same for Robinhood as well as its competitors. The bargaining power of buyers is also high for 2 key reasons. First of all, the cost for customers to switch from Robinhood to a similar platform is 0. Withdrawals are free on the platform, which makes customer retention a key issue for the platform moving forward. And on the topic of customer retention, the potential for substitutes is high as the disruptive tech and the AI and the deep learning algorithms develop further. There is the potential for more and more entrants into the market. Expanding then on the threat of new entries, we again noted that this was high due to low investment requirements, low barriers to entry, a commoditized market, and low loyalty of clients, particularly younger generations, and easy comparison and easy switching at no cost. So finally, the competitive rivalry is also high due to the growing number of competitors as a result of the points that we've just raised, and also there are now many competitors also offering similar products and services.
Robinhood operates in a highly competitive sector of online brokerage and trading platforms. There are many players in this sector and the competition is high. Cost of compliance with regulations and of updating and maintaining technology are also significant. The revenue in this sector depends on the performance of the stock market. When the stock market is growing, there is generally a high customer activity. Due to all of these factors, the profitability of the sector is generally low. The main competitive advantage of the players in the sector is in providing their customers with value-adding services such as investment research and analytics, investment advice or margin lending, which may increase customer trading activity. Going forward, the sector will see divergent trends in profitability. Profitability will depend on the ability of the players to gather customer intelligence and to use customer analytics to personalize the services and products. Players that manage to deploy artificial intelligence and customer analytics to their advantage and create highly personalized products that stick with customers will enjoy higher profitability. Those who will not be doing this will have to compete on price.
As a venture capitalist, key criteria before making any investments would be to see whether the company has foreseeable business plan, including capital expenditures and expansion strategy, as well as its financing strategy. The next one is to see macroeconomic factors, generally by doing pastel analysis, which includes political, economical, social, technological, environmental, and legal view to support the confidence of the company's business plan. As a startup company, typically the company hasn't had a sufficient financial reports to show the company's performance. Thus, we would like to see the entrepreneur's track records and commitments beside any financial information. Lastly, we would also like to ask and see how the company on what there makes the company unique. How hard is it for competitors to imitate this uniqueness or this competitive advantage? The goal is to see the sustainability of the business in the future.
Further, further criteria that venture capital would look into when investing is knowing the industry and the market size of the company. In a report published by marketintelligence.com, it showed that the global fintech industry is predicted to have a compound annual growth rate of 13.2% between 2019 and 2024, highlighting North America as the largest market reach, while Asia Pacific is also expanding at a fast rate. According to fintechnews.com, about 33% of the financial services industry's revenue are coming from fintech companies. A large majority of global banks, insurers, and investment managers are planning to partner with financial technology companies over the next 3 to 5 years, expecting a 20% annual average rate of return on their investment on their innovation projects. Another criterion that VCs would look into before investing is the total company valuation. This will allow them to assess the potential investor value that they will be getting out of their investment, being value not limited to monetary value, but as well as brand value and reputation. As a venture capitalist, given that the market shows a positive outlook, and given that the company was able to reach a company valuation of between 7 to 10 billion as of May 2019, thus being a unicorn company within the industry, I would like to invest in Robinhood. Additionally, this decision to invest is also driven by the fact that the global number of millennials will be increasing in the near future and will continue to dominate the market. Since millennials are Robinhood's target market, and we would expect a growing number of users of the app. With the knowledge that the two founders of the company, being Stanford graduates and having a very good track record in establishing profitable startup, is also an added advantage. Improvement opportunities in the current business model. Although Porter's 5 forces show that the customer buying power is high, Robinhood can leverage this against competitor by offering a better product or better user interface or lower fees compared to competitor. As millennials are becoming even more reliant to their devices and technology, higher customer acquisition, engagement, and retention can be achieved by providing better user interface through using new emerging technology. In terms of customer relationship, according to Statista.com, there are currently an estimated value of 950 million worth of assets managed by robo-advisor. This technology segment has a CAGR, compound annual growth, of 27% over the next 4 years. Robinhood could adapt this technology to improve their customer relationship and advise them in regards to their trading choices and activities. In regards to customer segment, as North America and Europe are already being a saturated market, and with fintech industry growing in the Asia Pacific, Middle East, and emerging countries are catching up already, Robinhood could expand their customer base in these regions whilst still staying true to their target demographics of millennials and young professionals. In terms of key resources, channels, and revenue streams, adapting and combining the existing technology in the internet, artificial reality, virtual reality, artificial intelligence, and machine learning as key resources will enable Robinhood to explore further revenue opportunities. In channels, for example, integrating smart TV, home consoles, artificial reality consoles, and virtual reality consoles, along with e-commerce modes through the platform. Example, imagine watching the news and finding an interesting company to invest in. You then command Alexa, can you please put this company on my watch list? Or Alexa, can you buy these shares on the Robinhood platform right and then at that moment? A slight shift in Robinhood's business model will create a more interest for venture capitals because they will see more potential revenue sources. Thank you very much, and I hope we have provided you with valuable and interesting insights of the fintech industry as well as the potential of Robinhood further disrupting the fintech industry.